I'll get started very quick, 15 minutes. I think we're gonna have 4 sessions in a row, followed by a great panel. So my name is Jordan. I was born and raised in New York. I've been here in Tokyo for 17 years. I started my career with a computer science background. All my friends went off to Silicon Valley. I was the weird one who came to Japan to work in finance amidst the Lehman crisis. I worked at JP Morgan, mostly in markets, for about 8 years before launching my company, Zeitomo. Zeitomo is a marketplace for local services. We cover about 600 different types of services, from hiring a personal trainer to a photographer to renovating your home all across Japan. We raised money from more than 50 investors from top-tier Silicon Valley to domestic in Japan and everywhere in between, around $30 million in total. I grew the company to about 100 employees before transitioning to chairman. As chairman, I've now gotten involved in a number of different initiatives in the venture ecosystem. Notably, I've been a venture partner at Antler that I'll talk about. Also a mentor advisor to dozens of other kind of founders of various different stages, including profitable and public companies. And I am in the process of launching some new things in the ecosystem as well. Oops. So I thought we'd just start off this session with a little bit of an overview of what is going on in Japan, what is happening in venture, high level. So I think we have a history of making the best things even better. This is Kaizen, right? The improving, right? When it came to agriculture, where else in the world can you get these square melons, right? Watermelons. Best whiskey in the world, sushi in the world, right? Manufacturing, trains and cars and autos and services. We have games and deliveries. Best food in the world. I can't go back to the States without a toilet. So Japan is no stranger to the world stage and being on top of the world stage. Oops. However, Japan then went on to enjoy what some people refer to as the lost decades. There's a few decades where not that much happened in terms of actually increasing productivity. The black line here is topics that you can see. I call these lost decades the enjoyed decades, because it was still the best quality of life in the world, the best food in the world, it's clean, it's safe, trains run on time. However, domestically, I think we've woken up and found ourselves behind. No longer the second or the third, not the fourth largest market. And domestically saw that talent mattered, status mattered. Top talent was going into the largest companies possible. Right? 10 years ago, if you would graduate from a good university, you would work at the largest possible company, make everyone around you happy and proud of you. And if you weren't such a good student, you go to a smaller company, and the complete rejects of life, became entrepreneurs, right? And then within entrepreneurs, or freelancers, basically the goal was to be public. If you could be a public company CEO, that would give you credibility. You could go out and drink every night and give your information, I'm not just some startup founder that doesn't have anything, but I'm actually a listed public company. Unfortunately, most of these were too early. And then I think a lot of the risk-taking was much more of a scarcity versus an abundance mindset, right? So this, on the other hand, is in the US for the same period. We had a generation of bold, risk-on entrepreneurs that gave the rise to the largest companies in the world today and what is kind of now known as Silicon Valley. So this chart was showing how the S&P, the US index, the largest companies at the time when this chart was made, basically Google, Amazon, Facebook, Apple, Microsoft, their massive rise drove most of the value creation in the US. If you exclude those companies, it actually wasn't that different from Japan. So this was the government in Japan's reason for saying, if we just had $5 trillion companies, our economy would be all right as well. So that's kind of the starting point for a lot of what's happening right now. That said, in Japan, we do have very liquid capital markets compared to other parts of the world, especially Southeast Asia. There's a large problem with it, though, and this has bothered me ever since I've been working in markets before I even started my company. As a seed stage founder, I'd be like, what is your plan to go public? It's like, what? Right? Like, which month specifically will you go public? It's like, what? So I think there's two large challenges that we have with the IPO being the goal for most startups in Japan. One is that, it's because the IPO is a goal, and two is because actually small IPOs are possible. So if 100 companies go public a year, average market cap of around $100 million or less. So this is like a Series A, Series B in the US. Two things are I guess, a very large cost. You generally are sacrificing a lot of future growth. The organizational muscles that you build to hit your PL forecast within a 10% bound are very different than the organizational muscles that you need to go after triple-digit growth. And most of these companies, you see post-IPO, top has done well the last few years, up 50%, small cap down 50%, right? These companies have basically been optimizing for that goal, that point in time, and afterwards you rarely see the next layer of growth. And then liquidity. If you're going public less than $500 million, you're not going to have institutional investors that are even able to consider you because you won't have enough liquidity for them to be able to take the position size they need. So, I've spoken with a lot of global investors that want to invest in Japan. Like, Jordan, $100 million is my average ticket size. Where are companies I can invest in, right? In the US or China, plenty of these companies exist. And in Japan, unfortunately, there have not been that many. And lots of times, global investors have come because everybody loves Japan. And they look at startups and they find three things. Generally, one, the TAM, the market that you're going after, is too small. Or second, the growth rate of the company is too small. Maybe they're de-risking into a small IPO, right? Or third is that the exit is too small. Again, the IPO that they're targeting. All of these, to me, is basically they're not ambitious enough, right? And on the other hand, we've seen in the past year alone, ambitious founders, in my view, are disproportionately rewarded and capable of larger fundraising rounds, including from global investors. Global investors are happy to invest in Japan, want to invest in Japan, but there needs to be ambitious, globally minded founders that are going after a very large market. So Japan right now is at an inflection point, right? The public markets are back at an all-time high, healthy underlying this time versus the bubble that we had in the late 80s, early 90s. And on top of that, you're now starting to see the venture ecosystem on the right 10x over 10 years, right? So this is gone from being something basically irrelevant to now being something that is still smaller than Korea, but starting to have a little bit of a market and serial entrepreneurs, et cetera, come out. So the government, if you are aware, about 2.5 years ago announced its 5-year startup plan. So we've grown 10x over the last 10 years. We're going to 10x it again. Got a lot of harsh feedback from people, but personally I love it because it's a startup goal, right? 10x, right? And the Shiba cabinet put together a 1 trillion yen budget to 10x the ecosystem, making it explicitly the largest hub in Asia, China, going from 10,000 to 100,000 startups, 10x in the amount of capital that's being invested, and creating 100 unicorns. I'll give you a hint. It's very hard to build a unicorn if you're going public at an order of magnitude smaller. There are also 49 policy items that were announced. I'm not going to go into each of these, but across from bringing global investors to redoing stock options, basically the whole kitchen sink of everything that's been wrong in the last decade. The government did a great job of inventorying, like, yep, all these are wrong. Okay, let's go and address each one of these, and they've been doing just that. And so I traded Japanese equities when it was Abenomics, when there was a government plan to buy Japanese equities. And you know what things did? When there's a plan to buy, things go up. I'm pretty bullish on the directionality of the startup ecosystem right now. There's a lot going in. However, we need to make sure it's sustainable so that in 5 years from now, it still makes sense to go up and doesn't just become a bubble. And then government is kind of a little bit obsessed with Silicon Valley. In their own material, they put, Ben Horowitz, one of the co-founders of Interesting Horowitz, saying Japan is the best country in Asia, and we expect great things. We want to invest if there are good companies. My personal view is that one decacorn could change everything. Put another way, without a decacorn, everything is almost irrelevant, right? We have lots of small, hundreds of $1 million companies, some maybe domestic $1 billion businesses. These are very unlikely in our generation to become the next Sonys or Toyotas or the next large companies that have impact in the world. A decacorn, building a $10 billion private company over 10 years is incredibly hard. However, what that does is it creates then a network effect of really talented people that have experienced that massive, fast growth company going after a large market and that ambition, and seeing that ambition rewarded, seeing the transfer of power and capital from maybe the investors and other people into the people who actually built the future, right? Setting a role model of people that, yes, it is possible to build something globally. We haven't had a global success from Japan this generation, right? Also haven't had a decacorn. So I say the first decacorn, the first real meaningful global success. Global credibility. Global investors want to come here. There are more reasons to do so and to start the pipeline and increase competition. Large corporates all mostly have corporate arms, or interested in innovation, understand the need to innovate. But if you're a $100 billion company, you're not really threatened by a $100 million company. Sure, it's interesting. Sure, maybe we'll do some open innovation. But if you then all of a sudden have a $10 billion company knocking on your door, all of a sudden there's going to be some cracks in the armors, and larger corporates are going to force to take on more risk and move faster, or not keep up. So in my mind, 3 things are missing. 1, ambitious, globally minded founders. Right now there is arguably more capital than there are talented founders in this space. Lack of experienced mentors and talent networks. I think there are a lot of really, really, really talented people in Japan. Don't get me wrong on this. All the ingredients are here. However, if you're trying to build a $1 billion or $10 billion company, you want feedback from people who've done that before. And there's just not enough of those people here. And then investors playing the power law game, right? So if the goal is the small IPO, and you're going for 2-3x returns into that on later stages, that's very different from saying, hey, we're going to make 100 investments and one of these becomes a $10 billion business, right? So going from more of a risk monitoring approach to a power law approach, I think we're having more global investors and globally minded investors in Japan starting to evolve, and that will be some good pressure domestically, I hope. So, how do we go and create, we're trying to move from 10,000 startups a year to 100,000 startups a year for the government. How do we create 100, 1,000, 10,000 startups even a year with world-class ambition, right? Companies that actually have a shot on goal of becoming a decacorn. I believe we already have the ingredients. World-class talent is here, absolutely. Everybody knows this. Just they don't have the startup muscles. We have an abundance of capital, right? Very rich country. And we have a nationwide focus on innovation. Literally, the government is telling us that if we do not innovate and improve productivity, we will not have a pension come 20, 30, 40 years from now, right? And we are not increasing our population either. So we are still one of the world's largest economies. And we also have tremendous soft power and trust. The Made in Japan brand, but if you look at what's happening in the US and European investors being a little bit shaky by that, China still being hard to invest in, Germany shooting itself in the foot more than Japan, right? Like Japan is falling to the top by not being canceled. So I'm just going to give a very brief introduction on Antler, which is one of the solutions that I'm involved with that I think is really important for this. Antler is the most active investor in the world, based in 30 cities. We've made, I think by now, around 1,500 investments. First investment was made in Singapore in 2018, and now all over the world. Antler is a day zero investor, so this is before there is something to accelerate. This is before accelerators or incubators, really day zero, taking really, really talented founders, people who have skill, very specific experience, and helping them co-founder matching, ideation, surrounding in a room of unicorn experienced people, Silicon Valley investors to come through and support their growth. So we have, and globally it was like a couple 100,000 founders apply to Antler. In Japan, just to give you an idea of the funnel, our next residency is starting in April 7th. But last time we had about 1,000 founders apply. We took the most talented 60 to 70 people and we stick them in a room. It's like, I would want to bet on you to build. Those are the people that we take in. People from 20 to 60 years old, on average, it was around 10 years of work experience. And we then filter on, people form teams, track out. On week 10, we hold the investment committee and we invest the first couple $100,000. And then we follow on, we support all the way through. So this was the October residency. I think a couple of the founders were here as well. We just held our demo day last Monday. Since then, some have been featured in the Cabinet Office. One won the Takeoff Tokyo pitch. These are like all globally ambitious, looking to build something massive. Founders, we've just made 14 investments so far, but hopefully we'll be doubling and tripling and quadrupling this year on year very quickly. And then, yeah, I mean, because it's actually a global investor, it's not kind of limited to Japan thinking, and we have all the global founders, advisors, network of investors, and also our capital to support. The next residency is starting on April 7th. So we're very close to that. However, if someone did want to apply and was interested in, has maybe a great idea but doesn't have the right co-founder, maybe has started off their business but hasn't taken capital yet, criteria is that you are ambitious and looking to build the next decacorn. Would love to hear from you. All right, thank you.